What is up, peoples? It is the notorious, glorious V, the Guerrilla Economist, and I got my main man, the Algo Capitalist, is with me. We're riding shotgun, and we're having some fun. BTC is up like you would not believe. Market's going crazy. Gold is can't see me because gold is just breaking all sorts of records as well. My dude, my man, my guy, Dex, what's going on, brother?
What up, man? You know how it is, riding these pulse waves, baby.
All day surfing. I love it, bro. Wasn't it just last week that we went on the air and we told the people? We keep telling, like we were like Moses and Aaron coming down from the mountain. I was just Moses coming down from the mountain, but this time picture of Moses and Aaron both coming down the mountain, and we had the 10 pulse waves, the 10 pulse waves with us. And didn't we just tell the people that, hey, man, you know what? BTC is going to smash 12 by next week, possibly breach 13. Dex, are we? I mean, golly, man.
I know. What more do you have to do, right?
What more do you have? We've been on the money, and it ain't funny. You know what I'm saying? We've been on the money every single time. Every single time.
Exactly. That's why the subscriptions pay for themselves. I mean,
Pays for
even if we're
itself.
talking now, Bitcoin's up $1,490 on the futures alone. That's just the futures. Just
Jeez.
everything's on fire. GBTC, 1 penny shy of $17 a share right now.
Jeez.
That's right. The only exception today is that gold is down $6.40, trading at 14.12.30.
Yes,
After hitting 14.27 today.
Still out of the Illuminati chokehold of 13 in the 1300 range. Still out of that.
Absolutely, man. Absolutely. Yeah. Gold is on fire right now.
Yeah, isn't it funny that it just came out that Merrill Lynch was manipulating gold markets?
I know it's like every month there's someone there that they're talking about, and then they throw the guy under the bus that worked for them that they told to do it. And you just keep seeing that. If it ain't Goldman Sachs, is what is it? UBS.
Exactly. If it's not UBS, it's Deutsche Bank.
Exactly.
If it's not Deutsche Bank, it's Scotiabank. If it's not Scotiabank, it's Standard Charter. I mean, the list goes on and on. And the biggest offender is J.P. Morgan. Dex, have I ever told you a story that I was working with my partner in the LBMA, one of the guys I've been working with for damn near a decade, and he's like, "Yo, V, here's the deal. I got the Swiss bank. They're buying gold from J.P. Morgan, a vault in J.P. Morgan. Guess what they want me to do?" I'm like, "I don't know, Josh. What do they want you to do?" They want us to melt it down and assay the bar before they take delivery of it. I was like,
"Whoa!"
They don't trust JPM. The banks don't trust the banks when it comes to the yellow metal because they know there's some funny business going on with the manipulators like JPM.
But wait a minute. I thought that, the banks and the central banks only deal in gold because it's tradition. It's out of tradition.
Mm-hmm. They only deal in gold because they want to suppress it. Because let's be honest, if you're a central banker, the last thing you want is high gold and silver prices because it makes your fiat look bad.
Exactly.
You don't want that. You know?
They're playing both sides of the aisle because even if the fiat is going down, they'll say, that's okay. We got enough gold. We can do what we need to do. And we have everyone else's gold too. We're not giving it back to them like Venezuela.
Yeah.
A few weeks ago, they went and they took their gold and said, we're not giving it back to you because you owe us a debt. So we're going to hold on to this.
Craziness, man. Isn't it? It's nuts, bro. It's absolutely nuts. So let's get into it, man. Where do you want to begin? It is, let's talk about the land of Oz. Let's get away from the land of reality because reality is, folks, unemployment is crap. The physical economy is crumbling. That's the reality of it. But let's get into the land of Oz. Let's get into the bubble, the phantom markets that create that we can leverage to make some real wealth. Go for it, Dex.
All right. Well, right now, the big news is the G20 that's coming up. And there's two sides of this aisle. The one side is saying, well, don't expect anything to come out of this. Don't expect any kind of trade deals or anything of that nature. And then the other side is saying, well, the market still wants to rally off of this good news. So they're looking for any kind of talking point to help bolster the market. Here's the funny thing, though. As you know, market was down pretty decent yesterday. It was on its way to doing it again today. Early this morning, the president starts tweeting and doing a conference, as he always does. Whenever the market's down, he opens his mouth, and then the markets come right back to life again and stop falling for a moment. That's kind of the musical chairs act that they're doing right now. They did back down from coming against Iran. All right, they backed down off of that. They realized that the world was really watching and paying attention. They knew that this was basically fake news, trumped up charges against Iran, who never bothered anybody, and they knew that this was a false flag. So he backed away, and as soon as he did that, the price of crude oil pulled back yesterday. Now, because of what's going on with the G20 coming up and things of that nature, crude oil is back up again today. It's up $1.72 a barrel, just shy of $60 a barrel. We had $59.92 today. The word on the street is, once the G20 is over with, that the market stand a very high chance of just rolling over and falling off the cliff, including the crude oil. Crude oil only ran up because of the tough talks that the U.S. had against Iran. Once that begins to cool off and back down, the crude oil will correct sharply to go with it. In addition to that, as far as the U.S. equity market is concerned, it's looking for reasons, like I said, to rally, but it's tough going right now. It's hard to find reasons to really rally at this point. You're bouncing off of yesterday's lows, but that's it. You don't really have a rally going on today in Wall Street. You just have a nice little dead cat bounce. I think that we have not seen the lows yet, but we definitely have seen the highs for the time being. The Fed is the only extra iron in the fire right now that can fuel the markets. If the Fed lowers those interest rates, even a quarter basis point, that will be enough to cause the stock market to continue to rally into the fall. Shy of a rate cut from the Fed, I think the market continues to roll over. And so the scenario of the beginning market cycle, that 100-year cycle, begins to take effect. So the only way the 100-year cycle will play out is if the Fed comes in and interjects more cocaine into the market by way of stimulus. If it does not provide the stimulus, then what's going to end up happening is the market is going to fizzle out. So that's what we are. If the Fed does nothing, the market fizzles out. If the Fed does something, we're looking at a 100-year cycle, which means that you have not seen the highs in the stock market, and we have at least another, I want to say, possible 8 or 9 years of bull market rallying in the equity markets. The reason why I think that we're also going to roll over and not do that 100-year cycle is because Trump did also say that he was looking into suing some technology firms such as Facebook, wants to sue them. And when it was asked, well, what are you suing them for? Wasn't very clear. Didn't really sound like a good plan, but it was enough to roil the markets a little bit, but not really, because now, the NASDAQ's up about 50 points as we speak. So the market's kind of shrugging that off, and it's looking for reasons to be happy today. But I'm here to tell you that I think that the bears are going to come back out, and that today's bounce is just going to provide more opportunity for the bears to get short again. The other thing that I'm watching is with the bond market. Now, I will say this. The bonds did not really react like I was thinking that they would with a down market, especially the way the market was moving yesterday. It didn't do it. It did not trigger, a positive pulse wave. Instead, it rallied up to intraday resistance and then retreated. Unless the bonds can participate, I don't think that we're going to see much downside at this point. It's almost like the market is waiting to see what happens or what comes out of this G20 before it makes its decision. Bonds are still high in regards to that, but they're not rallying and breaking out with force like they normally would when the stock market looks to be a risk off scenario. So right now we got risk on for the day, but I think this is probably just some profit taking on the retail shorts, to be quite honest with you. Because if this was a real straight up rally, the market will be up triple digits right now and not barely up 40 points. So that's what I'm watching today. G20 is going to be a big deal, even though they're not expecting anything to come out of it. The thing that they're looking for is, a uniform view with the central banks. So far, other central banks have been not lowering those rates either, which is very interesting. It seems almost as they're taking their cue from the Federal Reserve in the States. So that's what we're watching. I know, right?
Really look at that, folks. There's a lot of action going on. We got a webinar and a seminar coming up on Friday. I don't think Frank sent me the links because he's been busy all day, but I'll have that up later. And also keep it locked. Go to watchustrade.io, watchustrade.io for the upcoming news and events over there. Also check out pulsewavetrading.com, and also check out the Patreon for yours truly. Links in the bottom. This way you get the complete geopolitical, geostrategic, geoeconomic picture that all of us here bring to you. Any last minute things you want to say to Dex before we go off?
Yes, click that like button, and don't forget to share and subscribe so you can be kept up to date to the latest info as we put it out.
Yep. And one last thing, guys. Before the show started, actually, when the show started in the beginning of the program, I said that, we were here last week telling you exactly what the price moves of Bitcoin was pretty much to the T, right?
Pretty much.
If people were positioned properly, you would have made some serious gains, some serious gains. Number one. Number two, people always ask us, well, where's it going? Well, Dex will give you the technicals and the technical details, the aspects of what the market is doing. And I'll tell you what the institutional buyers are doing. They're expecting, and this is what we're going to smash 13, just like we talked about in July, mid to late July. You're going to see us explode past 20. We're going to blow by 20. We will see 35,000 Bitcoin by December. That's what the institutions are telling me. All right, so brace yourself. Put on your seatbelts. A lot of people are sitting in the sidelines. Hey, is it too late to jump in? No. It ain't too late to jump in. Whether you're going to buy $100 of BTC or you're going to buy $100,000 or $100 million of BTC, it's not too late, and you will gain from every single level. That's it. Anything else, Dex?
Pimp those Satoshis. Oh, and by the way, major Fortune 500 companies are seeing no Brexit deal in the near future.
Just like you said.
Mm-hmm. Can't make this stuff up, folks.
And with that, we're over and out.